What's up guys, welcome back to another video, and in this video we're going to be doing a brief SPAC update on some of the more popular SPACs in the market right now. But before we get into that, I wanted to announce that Peak Sportswear will be doing a giveaway on my channel when we hit 6,000 subscribers. So we're currently at around 5,390. So around 6,000, we'll pick a winner. It'll be a random generated winner from the comment section in the videos, and all you have to do to enter is like each video going forward, starting with this one, and comment on each one, because however many videos I make from now until we hit 6,000 is basically the videos we're going to choose from. So you'll get to pick any pair of shoes off their website, and they have a ton of cool shoes. I really like the ones that I've been wearing, and I'll throw those up on the screen right now. They're super comfortable, and I've been doing my workouts in them, and they feel great. So like I said, we'll be picking the winner from the comment section, and I don't really get that many comments on my videos, so you have a pretty good chance of winning. So just make sure you're doing that. And as always, check out the links below. There's a free Discord server and free stock referrals. Now let's get into it. First up on the list is FMCI, and this is by far my favorite SPAC right now. They are pushing higher this week, so they're up about 15% this past week, currently around 25.70 at the time of this recording. We do have a vote on Thursday, so we could see a potential ticker change on Friday or even Monday. I would expect a drop just based on how previous SPACs have been going, but that shouldn't affect you if you're long on the company. I do like them long term, and they do have growing revenues and a great business model. Just looking over the investor presentation got me excited again to see where this company can go to. They did introduce online ordering, and they're already well established in some pretty big name stores, so that makes me feel great. They also reported record Q3 revenues, and basically they just have quick, easy foods to make, and it's in that healthy realm. And hopefully they add even more options going forward. So, I really like them. They don't have PIPE investors, which is cool, so we don't have to worry about a huge, massive sell-off. And the insider founder shares are locked up for about 180 days. So that's just something to keep in mind, but at least they can't sell off right away. Now, I don't know how the ticker change will affect the price because SPACs have just been playing different lately, but I don't really mind about the short term. I do find value in their warrants right now, though, and they're currently around $9 or maybe a bit less. So you're getting shares of FMCI for $20 or less, which I think is a good deal, and I will definitely exercise my warrants and play them for the long term. I do think this company will grow with each earnings report, and I could see them in the 30s for a while, growing year over year, and then maybe in a few years approach that $60 to $80 range. So I do have a good outlook on this company, and I'm bullish on them. Next is LCA, and they just filed their PRER14A on 10/13. So not much else has been going on with this one. Not a lot of news. They've been really quiet, and we have seen the price hovering fairly low the last few weeks. It's hovering at around $13.50, which is down around 3% this past week, and it sold off pretty hard from its all-time highs. But I do see upside in the near future. I think the SPAC sell-off in general, coupled with not a lot of news from the company, has really driven this price down. And I do think that in the near future it will start heading back north. I'm holding warrants and calls still because I do believe that once the merger is finalized, that Tillman will be able to be in a better position for PR and be able to just really speak on the company again. GNOG is a profitable business, but they do have some big competition out there. But I think overall they'll be able to compete. I still think we will hear more before month's end, and I do think the ticker will change this month, but we'll definitely have to wait and see. We need to hear more from the company first. Tillman does own both companies, Lancadia Holdings and GNOG, so I don't know why this wouldn't go through. I'm pretty confident this merger will happen. I think Gold Nugget will be set up to succeed. They just got another state confirmed, so that's Michigan, and that'll definitely help the business out. Post-merger, I can see Tillman getting his sports buddies or even some NBA guys to endorse or hold a stake in the company. sort of like Michael Jordan did with DraftKings. I think that will pump the stock up nicely. Now you got to keep in mind, he is kind of like a scummy businessman and he is money hungry. That's my opinion. So I think we will see this stock rise up. I don't think he will let this thing fall. Now keep in mind, insider shares are locked up for 60 days, so just be cautious of that. I wouldn't be buying call options for this one right now unless you play them very far out. SPACs just aren't trading like they were. So yeah, this one is just one that you could watch, or buying shares right now or warrants is a good deal, but definitely don't chase the FOMO once it starts. Next up on the list is OPES, and this is going to be BurgerFi. Nothing much going on here. Their last filing was their 8K, which was done on October 1st. Still waiting on an announcement and more from the company. We really haven't heard much, but we know that they do need to have things done by November 15th, last I checked, and they did do a press release saying this thing will happen in the Q4 of 2020. So that should give us some confidence there. I don't think this one will pop like crazy, especially with the state of SPACs right now, but hopefully it gets back to that $18 to $20 range sometime soon. It does take time for these things to come together full circle. Filings do take time, takes time to go public, and the team has struggled to get meetings in place and done. However, I don't think there's much risk that this thing won't happen, and I know most of their burger joints are in Florida, and Florida really hasn't taken things that seriously, so I don't think it's affecting their business that much. Like I said, these deals take time. They're currently trading around $11.56, so not much risk if you did want to buy in. And they're down about 0.34% this last week, so there's really not much volume on this one either. If you did have extra money, you could throw some in here, but I don't think there's a rush to buy into this one. You could just add it to a watch list and see how it plays out. Next up on the list is Dphc, and this is Lordstown Motors, and they're currently trading around $24.67, and they're up about 15.7% this past week. This one has definitely been on sale lately. Like I said, I don't know how SPACs will pop right now, and with the merger coming up, I don't know if it will sell off after or what. But many people do like this one, especially for the long term, as EV continues to be the direction that we're headed in. The meeting is set for October 22nd to approve the merger, so we'll definitely see how that plays out. Lordstown currently has a ton of pre-orders, and I think it's about 38,000 to 40,000 pre-orders, and these are non-binding, so that didn't require any deposit, but Lordstown believes that they have clear demand, and this will lead to binding orders. So that's something to keep in mind. They do have a pretty promising business model, and their investor presentation looks pretty nice. I also think that if Workhorse gets this contract, it will help push Lordstown even higher, because from what I can see, they trade very similarly. When Workhorse is down, Lordstown is usually down, and vice versa. So they do have a great management team, and they're expected to grow dramatically. So their units are expected to grow from 3 million in 2019 to estimated 27 million in 2030. A nice little PR move they recently did was announcing the partnership with Joe Burrow. So here's what the article looks like. It says a partnership that works together, and it shows Joe Burrow in the Lordstown Motors truck. Now, I don't think this is going to be a huge catalyst that drives the stock price up, but it's a nice little catalyst, and I think what I take away from it is that it shows that Lordstown Motors is interested in striking deals and partnerships with people. And that's more than we can say for some other recent mergers out there. So at least they're giving the shareholders something. And, this guy is going to be huge. He's already, doing so well in the NFL, did very well in college, and he's very popular. So who knows where this partnership will go and lead into. And, they're probably going to continue to do this with multiple athletes and multiple people. We see Matthew McConaughey in commercials driving cars all the time, and that actually does a lot for the company. People see these people in these certain vehicles and they want to go get it themselves. So just a small catalyst, but I'm all for it. Last up on the list is Ipob, and this is Open Door. And we all know they use technology to help people buy and sell or trade in homes, and they buy homes themselves, they hold it, they pay interest on it while making minor renovations, and then they sell it. That's pretty much their business model, and they are up quite a bit this past week. They're up about 37%, and I did recently make a video on them when they were trading around 20, and then they fell back to the 18 mark. I knew it was going to have a bit of a sell-off, but since then, they've definitely picked it up. FOMO buying is starting to begin, I believe, and ARK Invest recently dumped Zillow for IPOB, and I think that is the cause of this bit of a surge. People do like following ARK, and I've mentioned in that video that a lot of people will just follow ARK and trust their outlook on investing, which isn't the worst thing to do, but I think that's why we're seeing the price shoot up. Just keep in mind, this is a Q4 merger, and there will likely be multiple times to buy in, so I wouldn't chase the stock and the FOMO buying, especially if you're looking to play this in the short term. If you really want to buy right now, I suggest buying the warrants, as they're a better deal than the shares at the moment, in my opinion. So obviously SPACs just have not been trading or moving like they were a month or two ago, so definitely be more cautious when entering into any SPAC right now, especially if you're playing the short-term hype. The last few mergers have sold off drastically, and we need to be aware of that, so I would not be buying call options for SPACs at the moment. If anything, maybe buy the opposite, so maybe buy puts if you really want to play options. They're just not moving the same right now, so make sure you're buying things far out if you do want to play that game, or stick to the warrants because they're much safer. It'll be very interesting to see how these next few mergers play out, so be on the lookout and ready to reevaluate SPACs as October, moves along, and we can hopefully gain a better understanding how SPACs will begin to play out in the near future and how they're going to move again. Keep in mind, the end of the month will be volatile, so there will be more opportunities to buy in, especially post-merger, so never rush into anything. We do have the election coming up, and I do think we're going to have some red days. So like I said, don't FOMO buy, set some price targets, and be ready to buy in. And that's pretty much it. Please like and subscribe, and have a good one.
Stacking vertical, ooh, counting sideways, ooh, ain't by my cake, ooh, get out my